Mutual funds are a type of investment that allows individuals like you to pool their money together with other investors. This pooled money is then managed by professional fund managers who make investment decisions on behalf of the investors. When you invest in a mutual fund, you're essentially buying units or shares of the fund. These units represent your ownership in the overall portfolio of investments held by the fund. The fund manager uses the pooled money to invest in a diversified portfolio of assets such as stocks, bonds, or other securities, depending on the fund's objective. Mutual funds provide diversification by investing in a wide range of assets. This helps to spread the investment risk because if one investment performs poorly, others may perform well, balancing out the overall returns. Experienced fund managers analyze market trends, research companies, and make investment decisions on behalf of the investors. Their expertise and knowledge can help you make better investment choices. Mutual funds typically have a lower investment requirement compared to directly buying individual stocks or bonds. This allows investors with smaller amounts of money to access a diversified investment portfolio. Mutual funds are generally liquid investments, meaning you can buy or sell your units on any business day. This provides you with the flexibility to access your money when needed, although it's important to consider potential fees or restrictions that may apply. Mutual funds come in various types and cater to different investment objectives. Some funds focus on specific sectors, e.g., technology or healthcare, while others may aim for long-term growth or regular income. It's important to choose a fund that aligns with your investment goals. Mutual funds charge fees, such as management fees and operating expenses, which are used to cover the costs of managing the fund. It's important to understand the fee structure and compare it across different funds to make informed investment decisions. Investing in mutual funds involves risks, including the potential for loss of principal. It's advisable to do thorough research, consult with a financial advisor if needed, and carefully review the fund's prospectus before investing.